Good evening, ladies and gentlemen. Today is the 17th of March, and once again, very interesting day in the market. We have now tested the swing low again and broke beyond that as well. Everybody was expecting the dip to get bought eventually, but seems like a lot of events coming up and this, that, and whatnot. Some sort of panic selling going on. Massive sell-off in HDFC Bank and Reliance, mainly Reliance. And that saw eventually during the day I had to also adjust my positional trade in Reliance by rolling it forward, which worked out really well considering the cascade after. We gapped up, got sold into by 100 points. We had a very quick short covering move which took us up 100 points, and from there we crashed about 250 points. It would have been a very tricky day even to be short on the market because there were multiple stop loss candles that kept coming up at different points of time. Overall, it was a very tricky day. I managed to do alright. I managed to return a little more than 3% on my trading capital today. But this was a very confusing Wednesday, and that's why I'm not carrying any overnight trades for tomorrow. So we'll have to study the data later on today and arrive at what will be the setup for expiry. Meanwhile, I think there should be some very good takeaways in this trading day in terms of how do you break a trade, because obviously trading a strangle in such a situation, eventually, especially in the last half an hour of sell-off, I had to break the trade and then trail the other side and re-enter the trade where we found stability. So I think a lot of that will be useful. I hope you find this of use at least. Have a great evening. We'll see you tomorrow. Take care. Good morning, ladies and gentlemen. So we opened today after US markets were slightly in the negative and Asian markets also in the negative, but Nifty futures were trading more or less flat. At the opening, we got sold into by about 50 points or so. We used that as an opportunity to sell these puts for quite a good price. We also sold a call, and now we're seeing these prices normalize towards each other. The idea for today is very simple. Today is a Wednesday, so that being the case, these options have to expire tomorrow. This is a 400 point triangle which is currently trading at 60 points. Towards the end of today, this should decay to less than 30 points if we hold exact range. There have been a lot of short straddles built up around 14,900 now, but 15,000 also continues to see a lot of traction. The idea we used the dip to sell the puts is because basically, and you can see at entry, our puts were far more expensive than our calls, is because we were essentially trying to buy the dip. We're not seeing too much downside. At the same time, we don't want to sell the 15,050 call because any short covering run up could really push us over 15,000 easily, and 15,050 strike could easily be at a problem. So that being the case, we've just entered our position, and today being a Wednesday should be a good risk reward day for us. At the same time, Wednesday volatility is a very well known thing now in the market. Okay, so what is happening? So we gapped up, got sold into. Yesterday's low acted as the support, so you can see 1, 2, 3 times it's acted as the support, and yeah, at this point we are holding the range. What is happening on Reliance? Nothing. We're holding around 2100. We'll have to see if we then start cascading down. If we start cascading below 2080 today, then we'll roll forward our Reliance position today itself. If we don't, if we hold around 2100, then we will wait till Friday to roll forward our monthly trade on Reliance. Later today, I'll cover some of the positional trades as well, how they're doing. Nifty IT looks good after the gap up once again. We're heading higher, and Bank Nifty continues to remain sideways. So we'll have to take a look at some of Bank Nifty's open interest. I mean, today's data will not be updated, but there's a lot of positions around 35,000, and we're seeing some positions built up around 34,800 as well. Nothing evidently obvious, but the idea for Bank Nifty will be if we start testing here again, then we are going to create a bullish spread, debit spread. So around 34,500, the risk reward for a bullish spread will be quite good. As you can see, Bank Nifty have been in this channel on the upside of it, in the middle, and now come to the downside. This will be a contra trade that we'll be taking if we start heading to 34,500. Okay, so now we're seeing these calls expand a little because IT is quite strong, and IT is making this up move now above yesterday's highs. So we're not too concerned about this call expanding right away. because what we need is this to be taken out from where we've been rejected twice. So 14,950, we need to head up, hold for 10 minutes, and then head up from there again. So if we head up here, hold for 10 minutes, then we'll consider moving the calls higher. Until then, not of a concern. And even if we do head up, it should be again resistance at 15,000, 15,050. And these options are expiring tomorrow, so they're not going to retain too much value. That much goes without saying. So that being the case, seems like a pretty decent setup for today, and should be relatively range bound unless IT really takes off, because there's not much happening anywhere else. It's just mainly IT, and all the other indices more or less flat. So yeah, so that being the case, the 15,100 call, the reason we specifically sold 15,100, not 1550, that criteria is working out quite well. Okay, so we'll cover some of the positional stuff. So just going over our positional trades. Currently, we have Bank Nifty covered call, which is a very long term view, so we're not doing anything. Our call sold is at 35,000, which is very good. We're going to continue to hold that. HDFC covered call, once again, shares we plan to take delivery of, so it doesn't really matter. We're just going to hold that as well. India Bulls Housing Finance, we took a short straddle because the IV was quite high, and this is returning currently 7.7%, and we're going to continue to hold, do nothing there. IRCTC, we're at our break even point now, so but we are still at a 1% profit even though we're at our break even. We are going to square this off, and then we're going to create it at 1900. ITC covered call, we're not going to do anything. Reliance today, most likely we're going to roll it forward towards the end. We'll see what kind of premium we're getting. I'll just show you what is going to be the idea on this. Basically, right now, what is bleeding on our Reliance, right? So here, what we'll be doing is we will keep the calls here in the next month. We'll move this to April. We'll keep the calls at 2,200, and we'll move the puts to 2,100, and we will hedge our upside really well. We won't hedge our downside that much. What is the idea for that? Because we're not expecting too much downside. We're willing to take the downside risk, and in case we get beaten on the downside, we just need an additional month to fix that. So without giving much upside, we will be covering the downside. So what is the idea here? Currently, this 2,200 Reliance put, which we sold at 76, is trading at 117, right? So that is roughly about 40 points, we can say. We have lost on the put side. We have gained on the call side. But similarly, let us say we look at the March 2200 put, which is trading at 117. If we roll that forward exactly, currently if we buy this back at 117, we'll be booking a 40 point loss. If we roll it to the next month, we'll be getting 116. But if we roll it down to 2100, we'll be getting 90, which will cover the 40 points that we're currently losing on the put and give us an additional 50 points. If the idea is to just collect what I've lost on the put, then I need to find the maybe 2000 put, which will be trading at something like that. So the Reliance March 2000 put is trading slightly higher than 40. So in fact, even if I had just sold these puts naked, and right now I was losing money on it. If I had sold this puts naked, I'm losing 40 points on it. If I just want to collect back that 40 points, all I have to do is square this off and move it to the next month. You are taking time from the market and buying additional premium by doing that. So you're selling time for additional premium and the ability to be less right. So that's how rolling forward would work. We'll consider it towards the end of the day. Let's see how things go if we have like a... But this is pretty good because we're able to collect, since Reliance again started heading down, the put side IV has gone up. We're getting good prices on the put side. So today we'll consider rolling by the end of today. Okay, the time is 10 o'clock. We're doing all right on the intraday trade. We're holding range. We're holding around 14,900, and that has become the new stable point. So we've also rolled forward our Reliance position. So basically we've closed all of our Reliance positions and we have moved it to the next month. So basically on closing, roughly, I mean, we've previously booked about 5 lakhs on Reliance when it moved up and we adjusted our puts up. Now more or less we are closing this at cost. and we have moved it forward to the next month, and the current position looks something like this. At entry itself, we're in the negative because there is slippage and it cannot be avoided. So currently we will now break even on Reliance between 2000 and 2300, just a little bit more than that, and we have bought a lot of more time to be profitable in the same range. We are not going to make any adjustments to this position until we break 2000 on the downside, or we break 2200 on the upside. So in this range, in this 200 point range, we're not going to make any adjustments to this position, and we're just going to continue to hold. So max profit is obviously between 2100 and 2200. That's the max profit range. Apart from that, IRCTC trade as well, we have to close now, and we'll be exiting all of this and entering the 1900 short straddle iron butterfly on IRCTC. So we're seeing a slide now on the Nifty, which is mainly coming from IT and Reliance both tanking at the same time. Bank Nifty helping out as well, doing its part. So we will hold on to our puts until we touch 14850. If we are sliding below 14850, like we make a 10-point move below 14850 or continue to cascade, then we will be getting out of the puts. The puts aren't particularly very expanded because these puts, whatever said and done, are still 150 points away and expiring tomorrow. They haven't particularly expanded as of yet. The calls are decaying, which is good. So we will roll away these puts once we touch 14850. Half of them we will roll away, and if we continue to slide from there, we will roll away all of them to 14650. So that's the plan for now. So far on the strangle itself, we're doing well. We're close to 5 points in the positive for now, and the idea today will be to keep protecting whatever points we have already captured. We're not going to be in a rush to move the puts. They're 150 points away still, and we don't want to roll down our calls either because big short covering move could take us easily over 15,000. So if we hold below 14,900 for a while, the next half an hour, then we'll consider rolling down our calls. Until then, not really. Okay, the down move continues. We're taking a look at the open interest. One thing that is evident now is 15,200 is probably definitely the ceiling. And now we're seeing a huge amount of 15,000 call writing. So 15,000 call writing, 15,000 itself might become the ceiling for tomorrow's expiry. So at the same time, we're seeing a good amount of puts being written at 14,900, right? The dark blue line, 14,900 and 14,800. During this dip, we're not seeing too much of that being unbound. What we'll have to be on the lookout for is these two lines, this dark blue and this dark purple. What we'll have to be on the lookout for if this dip is actually being used as an opportunity to write more of the 14,900 and 14,800 puts. We have written the 14,700 puts, so we are very far away from the firing line. What we're more concerned also of is some kind of big unwinding starting to take place on the put side. So we don't want to be overly exposed to a big cascade, which is why we have our rolling criteria in place. We test 14,850 and start heading down from there, or we're holding below 14,850, then we will automatically roll away our put. So as far as our trade plan is concerned, we are sorted. We're just taking a look at what some of the other people in the market are doing. Okay, I'll just go over this. Basically, we're seeing very good amount of call writing at 14,900 and some of the puts being unwound at 14,900. So we are risking off from the put side. We are now basically testing 14,850 as well. So that being the case, it's good to take the risk off. Yeah, the reason we're doing that is we're protecting the points that we've already captured. We don't want to give it all up because there's some kind of cascading move. What's happening on the open interest front? Right now, 15,200 has definitely become a ceiling. 15,000 call is also potentially becoming some kind of ceiling. And now we're seeing call writing at 14,900. You see this light blue line, 14,900 call, quite a bit. And some of these puts have been unwound, not too many, which tells you that 14,900 plus minus is still very much on the cards, the 14,900 straddle. But at the same time, we don't want to take that risk. We will still get a good amount of DK. The 14,650 being worth 27 is very good. And of course, our premium positioning also suggests that we are expecting a pullback from these levels. And this should still give us very good amount of DK. This 450 point strangle should not be worth tomorrow morning. 450 point strangle should not be worth more than 20. Okay, the time is 11:10. What we've done is we moved 1/3 of our calls. We've closed them and we've moved them to 1550. What we'll do now is we considerably head below 14,850 by 20 points, or we hold below 14,850 for 15 minutes, which we haven't done so far yet. The day's low I think is 14,845. We do that, then we will move down the rest of these calls here. If not, then we start heading back to 14,900. Then we will move these calls up to here. So that's the action plan for now. Just 1/3 the position has been moved down. We don't want to very aggressively move down our calls because there's been tremendous call writing, and just one spark can light the whole thing on fire. So yeah, that's why right now the bias would be long rather than short. That's what the options are pricing in as well. If you see currently, more or less, the options premiums are also quite good. The calls, the way they're trading, it's anticipating a potential up move. So yeah, keeping all that in mind, the time is 11:11 and this is our current position. Okay, so we're seeing now this big green candle, and we'll have to see how options prices react to it. The 1550 call still being 150 points away, hasn't expanded much. Really crashed the puts, which is good for us. And this call is now starting to expand. So what we will do most likely is we will wait for either the addition of another 20 points from here, or we will wait for this level to hold for the next 3 candles. And if it holds, we are going to square off this. This is 1/3 our position. So we're going to square this off and we're going to move it back up to the 15,100. That was moved down to protect these puts. These puts now don't need that much protection. So we can head back up, but we will wait for the next 3 candles or for 20 points on the upside to do that. Okay, big up moves. So we had to quickly make a couple of changes. Basically, we had to get out of the 15,150 call that we had sold. This started expanding big time, mainly from Bank Nifty. Bank Nifty seems to be making a move about 35,000. Now, one of two things can happen. Either it can be contained at 35,000 where maximum MOA is at 35,000, or we can see some kind of a mad short covering spurt that can easily cover 400, 500 points on the Bank Nifty, and that would be quite big for the Nifty. So what have we done? We have squared off the lower calls, moved the calls higher, and moved up the puts as well. Now, what will we do if this continues to go? So if we now break above 14,950 and we start heading higher, then we will move away half this position even further. We'll move it away by 50 points. The puts will remain at 14,700. The puts will remain at 14,700 until we break above 15,000. It also depends on the rate at which it starts happening. So if this generates some big short covering spurt, we don't want to stand waiting for it. So 15,100 is still 150 points away, so that is fine. The only issue is how quickly these shorts get covered. So for now, that's the plan. We head above 14,950, which is what we're doing now. We hold there for a while, then we'll move away half the calls to a higher strike. So how is this looked at from a price action perspective and why 14,950? See, this has been a resistance the past few days. What acted as a support, then became a resistance. Many people went short, short, short. Now if these guys start covering, or on Bank Nifty these guys start covering, that leads to a big up move. I would have sold the calls for, let us say, at different points of time at different prices, and they would want to either lock in their profits by trailing the stop loss lower, or by there will be some point at which they're like, screw it, I'm taking it off. Now it's like a cat and mouse game. Who does it first? If these guys manage to get out and enough people push it here, everyone's going to be like, okay, get me out, get me out, get me out, stop loss, stop loss, stop loss, which is why it is dangerous. So we're very intently watching the calls. 15,100 is still a very good strike, and it's available for a decent price. Obviously, really escalated because of the up move that we saw. But we're going to continue to hold our position exactly as it is. We're 250 points away, more or less, from the put side, and we are 150 points away from the call side. So currently our straddle centers at 14,900, and that's what a lot of the open interest is also suggesting, wherein we should be seeing a lot of action around plus minus 14,900. Now, that being the case, so yeah, we should be seeing a lot of action around 14,900. Very plain and simple. And that's what right now, likely expiry, if somebody were to pin, would be 14,900 or 15,000. That's the expiry range. That's what it is looking like from the data. So we made this big move, did not have the strength to go above, so this obviously gets protected. One more criteria now comes into play. So you see this 14,900, 14,900. Below this candle again, many people might try to get out of the long positions that were created at this breakout. But as long as we are above the day's low, it's still perfectly good to hold our trade. We'll continue to hold our trade, and currently this triangle, which is 400 points, having above 47, 48 points, should give us easily 10-15 points of decay by the end of today. So the plan will be to continue to hold. We are in line with the data. Bank Nifty as well, 35,000, taking a halt. So not too much happening. A lot of positions being built up around 14,900. So what can be the range for tomorrow's expiry going by that? So the 14,900 put is trading for 96. 14,900 call is trading for 104. Yeah. So the straddle premium is something like 170. Most likely we'll go into the expiry by today's close. That straddle probably being worth some. I mean, if we stick to the range, will be probably worth around 135, 140. Time is 12 o'clock, and yeah, we saw a 100-point short covering move, and then that got sold into by 50 plus points. And yeah, meanwhile, this entire time, our triangle has been very well balanced and in a good spot. Games are being played up and down, move around 14,900, but at the same time, there is a very real fear of some kind of short covering being triggered, and that can realistically, right now, people must be thinking 15,100, no chance it goes in the money. You'd be surprised. We might even expire at 15,200 if a proper short covering is triggered, especially after we've been heading down. People have been selling calls. There are a lot of calls built up at 15,000, 15,100, 15,200. So yeah, that's the only fear. The put side, once again, continue to remain that it's okay if the puts are slightly more expensive than the calls, especially when we're hugging 14,900. If we start once again breaking down towards the day's low, then yes, we have to take corrective action. Until then, not really have to do anything. Okay, so we're continuing to see this day, which is now is head. I don't know, do we make a higher low or not? That's what we have to see. How does this matter? People who have gone long, right, they would have their stop loss below this place from where we saw the short covering. So if we actually head down there, there could be further cascade. We're looking at what is happening so far. The same time that this slide is happening, we're seeing, so if you see this dark blue and light blue line, the 14,900 call and the 14,900 put. So despite this dip, we're actually seeing a writing at 14,900. So this is good. This just gives us more of an indication that people don't mind writing puts in the money into what is a 50-point dip from 14,900. So more and more 14,900 short straddles being built up. How our position is looking is the calls have lost good amount of value. The puts have gained, but not as much as you would think. So it just shows you that the risk reward that is anticipated on the 14,700 put at this point of time is not that high. So despite the entire up move more or less being sold into, we're not seeing any kind of big expansion on this. So yeah, that's what is happening so far, and we're going to continue to hold this. And if the puts do remain expensive, maybe there's an opportunity to carry a trade overnight, because really not expecting downside below 14,800, like that is off the cards as far as this expiry is concerned. Okay, so we are now dipping back to the day's low, came back to the day's low, and yeah, we need to see what kind of options positions are building up at this point of time. It's a little confusing, a little all over the place. 100-point up move, then completely sold into gap up, sold into middle low, 100-point up move, then 100-point down move. We'll have to see where this continues. What we have done is we once again moved down our calls to sort of protect the expanding puts. The calls will not go down too much further. That's going to be the issue, whereas the puts may really expand. Of course, we have, goes without saying, stop loss market orders on the puts about 8 points away. One thing about stop loss orders, right? I mean, people keep saying, how do you put stop loss? How do you put stop loss? The stop loss is not a stop loss. It's just in case that kind of expansion happens, I won't have time to react. I won't have time to sit in exit every single order. I want to get out at that point. If the puts have expanded by 8 points, it means that we've made a 30-point or a 40-point down move from here very quickly, and I've not been able to react to that. So at that point, I want to get out. So that is exactly why there's a stop loss market order. So right now, from the looks of it, yeah, we're seeing more or less the data is suggesting sideways around 14,900, which is why I'm not expecting too much downside from here. So we might end up being wrong, and in which case, if we start heading towards 14,800, we're going to be exiting the puts and moving them further away. The 14,650 put has expanded back to 2122, which is a good amount of premium. If these expand to 35, that means those would be trading at something like 24, 25, and at that point we will exit these puts and enter those puts. So meanwhile, let's also go over some price action related stuff. Okay, so this is the day's low, middle low. Once again, tested the day's low. Many people would have gone short here, literally at the day's low, saying that the day's low is breaking, let's go short. But the moment that they see that in the broader market, that momentum is not continuing, that look, we're not, I mean, they're entering a pretty bad risk reward trade. They're shorting the index at the day's low, especially after all the up moves that we made. There were opportunities to short here and whatnot. There'll be some guys who shorted here. And when they see that this is not continuing, it's not cascading down, they immediately cover. So it's like a very quick in and out sort of a thing, which is what propels us back up from the day's low. That's why generally day's low acts as a support, because anyone who goes short at that point, everyone realizes, whoever is short, that relatively their risk reward of going short here is pretty meek unless there's a big cascade. So if there isn't that cascade, that's why you see a pullback from the day's low. Now what has happened is, the calls that we've entered have expanded by a point. The puts have deflated by about a point. So not too much changing there. And for now, we continue to be balanced. So we are just hoping again that there won't be a 100-point up move followed by a 100-point down move. The range isn't necessarily always the problem. People think that it's difficult to manage a trading day where Nifty moves 350, 400, 500 points. Yes, it is. But at least since it's trending and it's consistently following the same pattern, it's relatively easier to manage. You can correct for delta on each side. Whereas when you're having in like 1, 2, 3, 4, 5, in 5 candles you have a 100-point up move, and then in another 5 candles you have a 100-point down move. Each time you're correcting for risk on the direction that the index is moving, so it can tend to be a little tricky. So that being the case, we still have great room to work with. We have 160 points on the put side and 200 points on the call side, which makes us very, very comfortable. And this also shows you a put which is 150 points away is trading at 27. A call that is almost 200 points away is trading for 20 cents. So they're both the same price. So market is pricing in that, okay, we never know. There's so many shorts built up. There can be this massive short covering move out of nowhere. So that is being priced in into the market. Okay, 1240, we have moved basically 40% of our position down. We moved the puts down, they're starting to expand. And we're now at the day's low. It's being dragged, the whole market is moving at once. So everything is moving in unison. Bank Nifty should take support more or less at 34,500. Regardless, it's still not the best case scenario to be taking too much put side risk. We will wait and see if these expand to 35. This will expand to 25 and then we will switch. So that will be the plan. The day's low has been broken, but we're not sliding from here. That's potentially a good thing. But at the same time, we reverse from here, these calls will expand. Okay, so we're continuing to see the slide. We're going to just risk off and exit these puts. The thing is, when we're exiting these puts for quite a high price, we're also entering other puts at a pretty decent price. So we are risking off, but we are getting the, like these puts at one point we're trading at 15, I think. So if you see, of course, when the market moved up, so these puts did go all the way till some 13, 14 and stuff. I mean, right here they went down all the way till 14. So at this point, but now we're getting to sell them for 24, which is good. I mean, with 23, 24, what we've sold, we head again to 15,850 and back. So basically, how are we looking at this? If we head here and head above this 14,860, we head above that. Immediately these calls will start expanding. We won't wait for them to expand too much. We will move them up as well. So this 15,100 call, which is currently trading at 17. If we see a 30 point up move from here, this will go to 26, 27, 28 maybe. So when this goes to 28, this will be trading at something like 21, 22. So that time we will sell these. That'll be the idea. Okay, so we don't want to have basically a negative delta at the point where we're trading at the day's low. What we've done to balance that a little bit is we have squared off 1/3 of the call side and moved it higher. So we will, these puts are trading at 21, these calls at 25. If they start expanding, we'll move these here anyway. So 1/3 of the position we've already moved away, anticipating a potential pullback. In which case these puts have to go down and these calls will expand, and we don't need to wait till then. We're just preempting that by moving them. Okay, so we had a green candle, once again, green candle to head back up, probably to take out a lot of the stop losses of people who had very tight stop losses. So we're done like trying to too actively manage the trade. Now it's almost going to be 1 o'clock. This triangle has something like 40 points in it. So out of those 40 points, we are going to have 50 point stop loss. And we are just going to trail this for the rest of today, because we are trying to each time correct, and that is sort of biting us. So what we're going to do is set stop losses on both of these at roughly about 32. Time is 1 o'clock and we're sort of just trading under 14,850 and taking a look at the OI. We are seeing 15,000 call getting stronger and stronger, and not that much premium available in the 15,200 call. That's probably why. Not too much trading there. Same time, 14,900 call as well, quite strong, but not too much unwinding on the 14,800 put. There was some unwinding on the 14,900 put,
but yeah, that is kind of stopped, and maybe most of those 14,900 puts are being moved to the 14,800. You see these two, blue and purple line. 14,700 put remains flat, so hasn't seen much change at all. In fact, the entire down move, not no unwinding on the 14,700 put. So that being said, we're quite comfortable in our position. We've got a very good range, and we don't want to keep correcting for each of these candles that are popping up random 30, 40 points to take out stop losses and then whatever. So far, clearly downtrending day, but how much more downside and where will it come from? Like how much further down can Reliance get pushed? How much further down can Bank Nifty get pushed? At some point, you'll see the supply kicks in. So that being the case, your view and trade don't have to be the same thing. My trade is balanced. I'm not looking to capitalize on some big up move if demand picks up from the buyers. I'm just here to capture the in between. So that being said, still another 2.5 hours to go. Anything can happen, and that's why we have our stop losses and everything in place. So we're seeing this candle, and the question is, so many people stop loss probably is here and then here. 14,900 could be a stop loss for anyone. It's short. So if we start heading back up now, then the calls are going to expand, but not by that much because these calls are quite far away, and these puts won't help compensate for that. So the idea will be square off these calls and move them here if we see some kind of big short covering move from here. So yeah, fear was on potential big short covering move. Let's see if that plays out or just fizzles off. This could be another one of those candles just to get stop losses of people, form a very strong candle, and try to get everybody up. Yeah, everything is moving at once. Bank, Nifty, IT, Reliance, I'm sure the rest of the market. So yeah, we're gonna wait and watch. We're not gonna quickly cut out either. No point in quickly trying to exit. So 15,850. Let's see if there starts to be supply there. Okay, so we took resistance and we're chilling now. So what has happened during the day is we saw that okay, there was 14,900 unwinding, 14,800 writing on the put side, and 15,000 call really strengthened, and we also saw 14,900 call really strengthened. So what has happened is a lot of people have shifted their short straddles, like whatever positions were built up, to 14,800, 14,850, 14,900. There are also positions at 15,000. So there is no evident expiry location at this point of time. It's just all over the place. But still shows you the fact that people, instead of just unwinding their puts, are writing 14,800 puts, that the downside is limited. So that could be a good takeaway. Our position is looking all right. We keep moving the stop losses closer each time. So stop losses now on both of these will be at 30-30, and we'll just try to lock in as the day progresses. Try to lock in what we have gained for the day, which is on our position size now less than 10 points. But yeah, we've been doing a very risk-off approach in the market until some form of stability happens and some sort of intraday volatility comes down. This is the better thing. The thing is, this trade itself might be a great trade, great range for tomorrow's expiry, but we are getting in and out of the trade today, and it doesn't matter if there's a great support and then the demand will pick up from some point. That demand might not pick up today, it might pick up tomorrow. We might have some kind of a gap up situation, in which case you didn't get to take that opportunity. So we only look at getting in and out today. So we have to look at our trade from that perspective. From that perspective, this range and this current pricing is attractive to continue holding, because towards the end of the day, this strangle will crash by quite a bit. But at the same time, if there's a big move we want to get out, which is why we keep moving in the stop losses. Okay, the time is 1:50. We are now again making a down move and testing 14,800, which I guess would have been expected considering the short straddles at 1400 being built up. Now that's fine. It's crashed the calls and slowly starting to expand the puts. And what we have done is we've moved down the stop loss on the put side to 29.30.31 in case there's some big rapid downside move that really explodes these puts. So we're not expecting that. We're seeing 14,800 halt and not a big move. So you might think, okay, the stop loss is actually quite close, but actually, if you think about it, this put has to expand like almost 50% to hit. So if this put expands by 50%, yes, our stop loss will hit, and that also the call will also cover quite a bit of that. We'll see in the meanwhile where this goes. So now once again we're at the day's low, and taking a look at the OI, once again 15,000 call, really strong now. So most likely 15,000 should be some kind of a ceiling tomorrow. We can consider that. We start testing 14,800, we will also consider selling the 15,000 call now. And yeah, all in the nearby strikes, all of them are calls. 15,000, 15,200 call, 15,300 call. You're seeing unwinding 15,300 call because there's not enough meat left in it, so people are moving it down. 14,100, 14,900, but at the same time 14,800 put still holds. So that being the case, we continue to hold our position. Our puts are still 160 points away, so that gives us good comfort. And yeah, let's wait and see what happens. We're now testing 14,800, so the 15,000 call is going to give us how much credit? 23 points. We'll wait for 14,800 to get tested and head down below before we shift. We don't want the calls to quickly expand. On a side note, should mention Reliance is absolutely tanking. I mean, the volumes are nothing great, but absolutely tanking. So, I mean, we've rolled forward our position so that we don't have any exposure for this month. And currently, this is our open position on Reliance, which is for April. And the downside break even is 2,000, and we don't mind Reliance hitting our downside break even and heading further down. It just means that there will be more opportunity to collect more put side premium on Reliance. So for now, after this change that we made in the morning, no further changes to be made. All our other trades more or less gone over. No changes will be made there either. Just moving down the calls now, because we continue to see a cascade and finally the puts are starting to expand. We moved down our calls to 15,000, which should now more or less act as some kind of a ceiling for tomorrow. The reason for that is we continue to see this cascade. Just now what takes support here, next visible support is 750. So what we'll do is we'll be moving our puts to 14,600 if they start expanding to around 30. Okay, 218, and we continue to see a slide towards 14,750. These puts have a stop loss at 32. So if the stop loss starts hitting, we will start selling the 14,600 put. Until then, we won't do anything. Obviously a lot of fear has gone up, which is why it is driving up the price of this put immensely. Same time, we've already rolled down our calls to 15,000. We don't intend to roll below that. Not at this point of time. We'll just take a look at what is the pricing available. Okay, still 38 points in the 14,900. What we'll do is we don't get bought back in the next 5 minutes, then and we don't see that these puts start deflating and they continue to head higher and they head over 30, then we will move down our calls as well, and then slowly move away the puts as well as move down our calls. So there should be demand here, but a lot of what is happening is, one, IT is broken down below yesterday's low and Reliance is seeing very heavy volume selling. Yeah, that being the case, apart from that, we don't test 14,750, which has been our recent swing low. We will be keeping the same position. Okay, so we saw one more stop loss candle. This was to take out stop losses, and looks like we are heading further down. The thing is, Reliance seems to have stopped falling, and Bank Nifty is now at what one can consider a support zone. right? So there should be support here, which is why on the Nifty as well, right? So recent swing low should be supported in this zone, but if everybody is expecting it, it might still get taken out. These puts have now expanded back to 28. We have stop losses on the put side 34. So the idea will be to not get stopped out. It's this put to expand by 6 points. It will take a big move. It will take a move below 14,750. So the idea is this expands to 30. We're going to square this off and roll the put away, and also consider rolling down the call at this point. There's 23 points in the 14,950 call. Now our goal will be to try and protect what we already have, and that should be the intention. We'll have to put some points on the table if we want to fight for the last 1 hour's DK, but at the same time, the bigger objective is to protect what we have already captured. One more really interesting thing to note is if you map the 14,700 put all day, despite this down move, nothing like close to, from the gap up, close to 1% down move. Actually, how many points did we move? So where did we open? We opened at, okay, so we made a high of 14,950. From there, we've given up close to 200 points, and this put is now trading at the same price. This is what happens Wednesdays. The risk reward is just deeply in favor. If you're buying and holding options on this day, it can be very, very tricky. You can buy the momentum and get out as soon as the momentum is gone, but buying in general will not work out too well. Yeah, we're on the 14,650. We're a strike away from that, and yeah, for now we're comfortable. We're not testing 14,750 at all. We continue to get find that there is demand. As soon as we start heading lower, there is demand. So we'll have to see what happens on the bank Nifty though. Still, I think from a risk reward perspective, going long here positionally is quite good. The reason I'm not doing that is I already have big long exposure and don't want to add to that. So one more thing to take note is in this entire charade, now the 14,800 call has seen good amount of writing. So there's a good amount of 14,800 call writing. But overall, if you see 14,800 has short straddle position. So basically these calls have been added later. Yeah, what we don't want is a big short covering move. It doesn't seem like it'll come because there doesn't seem to be any kind of major strength displayed by anything today. So to trigger the short covering, first you need some kind of a move, and then that cascades the short covering. So that move might not come. We have a little less than an hour to go, 50 minutes to go, and this straddle continues to have about 42, 43 points in it. The put side IV will expand rapidly. If we break 14,750, the puts will go up big time. They'll add easily about 10 points in a 30-point move. So that's what we have to be careful of. Okay, so partly tricky, but more or less balanced with our triangle for now. Reliance has stopped moving down. Seems to be this 2050 zone acting as a support. And good thing that we rolled down our Reliance position when we did, because we moved it to the next month. Our puts are not going to expand the same way that this month's puts have expanded. So that worked out really well. And Bank Nifty as well, this 34,500 zone acting as a good support, and IT as well is at the same place from where it made an up move 2 days back. So everything is at a support zone. Seems to be a lot of fighting here, so finding both demand and supply. So now we don't know if we make a big move again on the downside or the upside, but we'll have to be careful and watch where that goes. So anyhow, our puts are not particularly expensive, and we continue to hold with the same theory that if this starts expanding to around 30, we will move it away and move down the call. Until then, no, or on the spot we start testing 14,750, that will be the same criteria. If not, then the last, now what is remaining of 37 minutes should see further deflation on this strangle, which is now trading at something like 42. Okay, stop losses on the put side have just hit, and what we're going to do is, I think that kicked us out of all the puts. And now we're sitting on just the calls. We're going to set stop losses on this at 17.5. So in case this cascade continues, then the calls will benefit a little. If not, 1 point will be given up on the call side. So I'll just repeat this. Basically another 20 minutes till we get auto squared off on the MIS positions. So we'll just keep these open. Okay, now at 15.5. So we'll reduce the stop loss to 16.75. Okay, calls continue to crash, market continues to crash. So yeah, we didn't get the opportunity to go long inputs, but this also works. We've sold calls that are expiring tomorrow, and we'll keep moving down the stop loss on this. Okay, 15.75. The puts have now expanded to 44. That's why stop losses are important. Okay, so we are just short calls now, and let's see if there's some kind of put spread that makes sense for tomorrow. How much is it? 14,500 put. We're getting quite a bit for it. Getting 16 points almost. Interesting. We can actually sell this for now, and we'll see towards the end if we want to carry or not. It's still 200 points away. Okay. We can cancel these stop losses. There's still 15 minutes where we can stay in this trade. Okay. And we'll set stop losses both on 22, and that's good enough. I mean, we've fallen a lot, and these puts are still 200 points away, 14,700, some kind of support. I mean, how much are we going to fall, right? 2, 3, 4. The momentum seems to have slowed. That's why we entered this. No matter what kind of hedging you do, stop losses are needed if you're doing intraday trading. So we broke our trade. We trailed the stop loss on our short position and then re-entered a strangle position. It's more or less how everything played out. Okay, so the idea is these puts are going to be nothing, worth almost nothing, and our hedge is also at 14,400. So a 100-point hedge now, and these puts are going to deflate a lot if this cascade stops at some point. 14,700 seems to be a good spot to stop. Bank Nifty 34,000. So if not, we get stopped out. That also works. Quite an intense. This Wednesday last half an hour stuff is quite ridiculous. Anyway, our trade looks all right for now. We have a 500-point width strangle with a 100-point hedge on either side, and our hedge has gained quite a bit in this sell-off, and we'll continue to hold this position till we get auto squared off. Okay, so here is where trading the Bank Nifty can get slightly tricky. So now we've broken here, and the next visible support is at 35,500, 700 points away. And yeah, probably not a good time to enter long. Maybe if your view is long term, you can start accumulating shares now. That's not such a bad idea, but yeah, for now, no trade to be had there. Our strangle continues to have little more than 30 points in it, and we continue to hold and trail. We'll move in our stop losses closer as we get closer to the squaring off period. So currently our stop losses are 22 on the put and 21 on the call. We will eventually make that 18 on the put and 16 or 17 on the call. Okay, the time is 3:20. In 5 minutes we'll get auto squared off. What we are going for is this triangle, which is now what, 25, coming down a little more than that. our stop loss on this triangle will be 27. So if this becomes worth something like 27, or our mark to market is something which is less than 3 lakhs, more or less same concept, then we have our stop loss orders all on MIS ready to go to start cutting the entire position. So that'll be it. I'm thinking of selling 14,500 put overnight, but I would much rather get a good night's sleep and not have to look at SGX Nifty. So I will not. I'll pick it up from where it starts tomorrow. Okay, this is good enough. We're going to start exiting our position. So we are buying back the spread. Okay, we bought back the spread. We need to quickly get out of our long puts, which have good value in it. The thing is, these crash changing a couple of pace, it does make a difference. Why did I not use the same basket to get out of this? Could have. Invariably, that sometimes this leads to errors, I found. So just I think as a habit, I've stopped doing that. Okay. Get out of the rest of this as well. The number of people selling bear call spreads. No, okay, intraday orders cancelled. Now 0,000 square us off. But yeah, so basically, because the number of people selling probably bear call spreads or something, these puts actually have not lost any value today. People call it increase of IV and whatnot. But yeah, basically, looks like a decent day, all things said and done. Our view was absolutely wrong, but we managed to keep correcting and eventually came out with something like a 3% profit, which is good enough. Thank you so much for watching. I hope you had a good trading day. We'll have to go over today's data later in the evening to see what kind of expiry setup will work. Might be a very tricky expiry. And yeah, have a great evening. I'll see you tomorrow. Take care. Bye-bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.